All right, well, welcome to this week's client support webinar. Today is November 29th, 2023. Great to have everybody here. Good turnout. All right, a couple things here. One is, don't forget, we record these and we actually put the recording on our YouTube channel in a special unlisted area. So you have to go through the client support area to access these because we like to keep them private, okay? So that way, when you ask a question, you know, it's your question, okay? It's not broadcasted all over the universe. Okay, that's probably a pretty good idea, right? Plus, sometimes we cover some little secret stuff, so we don't want to share that as well. Hope everybody's doing good and had a great Thanksgiving as well. I'm going to just go through some administrational items, and if you have any questions or any topics you want me to cover today, feel free to ask. All right, so first thing, of course, are talking about the risks involved in trading. There are risks in trading. Nothing's guaranteed. We work in a realm of probabilities. Even a proven system doesn't win all the time. So you have to have a risk control set of rules in place to guard against those times when the trades don't work. You want to keep those losses as small as possible and let your winners run. Also, too, we're going to be looking at using technical analysis. There's many different forms, and also we're going to be using software that I created in trading the financial markets and looking at charts today. Many of you have bought that, so if you have any questions on your software, feel free to ask away on that. And also, too, make sure you check with your financial advisor, accountant, or whoever manages your money to be sure before, if we look at a stock and you kind of think, oh boy, that looks really good and I'm recommending it, check with them to make sure it's suitable for you, because we don't know your personal situation, and of course they do. Let's see, what else can I cover here? I think that's pretty much it. Be sure you're trading with risk capital, money you can afford to trade with, and also realize that past performance doesn't guarantee future performance. Should probably say that. All right, here's my books out there. Many of you, I think, already have them here. I see a lot of familiar faces out there. So book on money management. I've got my new book coming out, The Art of Trading. So that's all available on Amazon, or you can get it through your major bookstores. Also, too, don't forget, we have on Friday, Stock Analysis Fridays. So definitely check us out there. What you want to do is go to our YouTube channel and hit subscribe, okay? That's important. And here are the different software tools. And again, you can buy these as a bundle, in other words, all at one time, or a la carte. So either way you want to do it is just totally up to you and your budget. This is the ART software, the OWL, the PTF, TLM, and ERI, which measures emotions in the index. Now, I've covered how these work in previous client supports. So if you just purchase this or you have any questions, check out those prior client supports. Of course, you can ask today as well, but that goes into an in-depth study on how those work. And then, of course, we have the scanners here and the risk control software as well. So definitely check that out. All right, so today I wanted to cover a little bit about something I call the hook, all right? Before I get into the hook, I just also want to talk to folks about, if you're using NinjaTrader, we've been hearing from various clients of ours that use NinjaTrader, but use it with the TD Ameritrade data, okay? So a lot of people will be importing TD Ameritrade into their NinjaTrader. However, TD Ameritrade merged with Schwab. So during that transaction, apparently they created new account numbers and also new mapping that has to be done by NinjaTrader for the software to work into NinjaTrader platform. So some people, it's interesting because I think it has to do more with the Schwab TD Ameritrade merger than with NinjaTrader, obviously. I think basically there's some type of link, obviously, that you use, and they're rolling that out, and correct me if I'm wrong, but they're rolling that out in phases. So apparently some people got their new account numbers and have been able to connect with Ninja, whereas other people have not because they haven't rolled it out for that person yet. So I think that's kind of it. If anybody's using NinjaTrader and have any more information, love to hear from you. Let me see, I know Jim, you use it, right? Jim Blue uses it for TD Ameritrade. I think you're importing TD Ameritrade. I'm not sure about other people, but you're okay, right, Jim? As I remember from last week, I think you said you were fine with it. And any other thoughts or any notices you've gotten on that, let us know, okay? Yeah, he says he's okay. So anyway, that's my understanding. Jim, if I'm wrong or you know something different than me or want to add, please do that, okay? So I can share that with the group, okay? Because I think that's an important aspect of it. The other thing too is just a quick announcement from Gene is that a couple things. One is that apparently, you know, we use PayPal as our merchant bank here at traderscoach.com. We have backups as well, but it seems like it seems like they're getting more and more strict on credit card fraud. And a lot of times people will process a payment and it will get returned. And if that happens, please contact your bank because it has something to do with the fraud out there, okay? And each individual bank is different. And so we've got some payments that go through just absolutely fine, and then others that don't. And usually when we dig deeper, the client has to call the bank to make sure they are okay and approve the transactions. And it doesn't matter if you're overseas or here in the United States, it can affect it equally the same. But that's kind of so if you get declined or it doesn't work and you know the credit card's good, definitely give your bank a call because they should have a good reason of why it didn't go through. All right, PayPal does a great job, but you know, again, it just depends on what the bank is giving them back in terms of information of whether they can process it or not. So definitely check with that. All right, so let me share a little bit about the hook, okay? So if you're in our day trading room, and we got a lot of people here, Jim, I know you're there. We've got quite a few other people here. I can't read the whole list right now, but I'm not gonna go through it all. But in the day trading room, we've been playing around with something called the hook, and it's kind of an interesting and fun thing to look at. And one of the things I've noticed is, you know, a lot of times when a market goes up, all right, and especially the day trading room, we'll open the day trading room and the market will already be up here. So it's kind of too risky to go long, but we want to wait and possibly go short, all right, and take advantage of that move to the downside. So the correction, right? So there's many ways you can do this. And one of the ways I think I'm finding that seems to be pretty good is if you're looking for a short, you've got a big move up, all right? Look for one last hook. So I call this the hook, all right? And basically, when it starts to roll over after the hook, all right, you can actually wait for the next hook and see if the hook resolves itself to the downside, okay? So that's a great way to increase the accuracy of trading corrections. And so you can also do that at bottoms too. You know, you can wait for the last hook and then wait for the next upturn and go in there, all right? And there's a whole bunch of exceptions. If I still have a bearish pyramid that hasn't been taken out, I'll wait, even though I have a hook certified on both sides, I'll wait for that to be exceeded before going long. But so there's little variations and exceptions because we use our software too. All right, so that's kind of an interesting thing that we have found works. If anybody has any thoughts on that, please share it. If you get a hook that is kind of like this, but then the next hook is pretty strong, that makes it a little harder to know if this is the final hook. So there's times when it's not so clear cut. And if it's not so clear cut, you don't have to trade it, okay? But usually if you see this type of thing and then you see this, that's a real good sign that it's probably now changed into a correction or change of trend of some type. So that's kind of something we've enjoyed playing around with in the actual day trading room, okay? So that. All right, so now the other thing I wanted to also let you know is that we've got the holidays coming up, so Jean wanted me to make sure, you know, if you're not on our email list, get on it, because we are going to be running, you know, specials throughout the holiday. So if you're looking to get some software or other products, this is a good time to do it, and you get to write it off on your taxes for 2023, right? But again, talk to your accountant just to be sure. All right, so there you have all that information. And don't forget, we have a lot of people using TradeStation too, okay? So TradeStation is one of our popular platforms as well, and you can set it up with the 3 charts just like that and so forth. So, you know, that's always, it doesn't matter what platform you do, you really have it on, just make sure you master the platform and know how to use it. And a lot of times the platform provider will give you necessary tutorials or instructions on how to use it. And if you're new to a platform, you should really go through those, okay? And I think that's a good idea. All right, let's see what else we got here. Okay, David, can you do let me just, okay, he's interested in a quick synopsis of the Elliott wave. Okay, all right, so let me go to the whiteboard again with that. So in terms of the Elliott wave, just really quickly, I'm not going to go into too much detail here. I assume you're a beginner, right, David? Okay, and you're just starting our course. Okay, good. All right, so, you know, there are 5 waves in a trend, okay? And that's the premise of the Elliott wave. And then corrections are basically represented like an ABC or a complex correction and things like that. So your first move up, followed by your pullback, followed by another pullback, and that represents your waves in a trend. So when you get to that 5th wave, okay, you're at the end of a trend. And then at this particular point, you should see the market correct and go into a correction. And that correction then will be a new change in trend. And then after you either get a big ABC or whatever it is, then you'll have new 5 waves occurring on the next move up. And that can be for bullish or bearishness. So you can also have that same sequence here going down. And that's the 1, 2, 3, 4, 5, right? Going down on the trend. Now, one of the interesting things that people also get confused at, you know, let's talk about support resistance levels. All right. So on a downtrend, the resistance levels here are at the bottom, right? On an uptrend, the resistance levels are at the top. Likewise, the support levels are down here. All right. And so if these are the resistance, these are going to be the supports. So they invert, okay? All right, so that's kind of the deal with that. So those are representations of impulsive waves, but when we also have corrections. So after we reach certain waves, okay, the market, let's say we're at the top of a 5th wave, goes into a correction. And this correction is usually represented by a simple ABC pattern. And then C will represent the bottom of whatever correction it is, okay? If you can count 5 waves down on the chart you're looking at, all right, then that will probably be some form of movement on a larger time frame. But after the 5th wave, you either get an ABC correction of some form or a 1, 2, 3, 4, 5, depending on the time frame, okay? So that type of thing is kind of interesting. And then, of course, the impulsive waves on an uptrend are the waves that are always moving in the direction of the trend. So that's going to be, not 1, 2, 3, 4, that's going to be 1, 3, and 5, whereas 2 and 4 represent the correction, usually the ABC types of things. Now, there are complex corrections, of course, all right? We'll keep it simple for right now. So that's kind of the way it works. So there is the impulsive wave 1, and then a correction, and then another impulsive wave 3, and a correction, and then another impulsive wave 3. So the impulsive waves always move in the direction of the trend, whether they're up or down. But the unique thing about impulsive waves is they're made up of smaller waves. So if we look at that pattern again, the 5 patterns, all right, there are actually 5 little waves inside here that make up wave 1. So there's smaller little wave counts inside. And then if you look at this, this is an ABC. We have a little ABC here. And then you have another impulsive wave, so you're going to have 5 more. And then the pattern repeats itself. So a lot of times that hook at the top can be a minor 4 occurring inside that particular sequence of whatever you're looking at. The one last thing to note is during a correction, let's say we got a 3 up here, we got an ABC and a 4. So now this represents wave 4, right? The move off the wave top. So these moves down are all going in the direction of the correction of wave 4. So guess what? These are impulsive waves. So A is an impulsive wave and C is an impulsive wave inside the correction because they are all pointing in the direction of the major 4. And so inside A, there are 5 waves again, okay? B will be here. And so it's kind of like putting a snowflake under a microscope. So with the Elliott wave, you can go and put a normal looking correction, 3, 4. If you put this under the microscope, you'll see this, okay? Likewise, you get the 5 in here. So if you put wave 3 under a microscope, you do that. So how do you put something under a microscope? Well, if this is a daily time frame, you can increase the magnification of looking at the smaller wave counts by going to a lower time frame, like a 60-minute. Sometimes you have to go even lower, okay, to see the waves. And sometimes you get a hint of the waves even on the time frame you're looking at. So if we're on a daily, all right, and you've got this 1, 2, 3, 4, 5, right? You may see subtle little moves in here, but if you want to see them clearer, drop down to the lower time frame. All right. So that, David, and combined with material from the book in the course, that's going to give you a good generalization of the Elliott wave. And then, of course, you can look deeper into that. Okay. And of course, come back here with more questions. But I think that's good without overdoing it. Okay. Especially since you're new. Problem with Elliott wave is sometimes people get into it and you got to kind of walk before you run with it and kind of get your arms around it because there is a lot to it. And, there's always patterns that can be messy, but they get clarified by going to a higher time frame. For example, if you're in a complex correction on a long-term time frame, it might look very messy on a short-term time frame. So keep going out until you get the bigger picture, or you can go lower and get the waves inside the mess, so to speak, and trade those. So for clarity, you can either go short, possibly, or long. Okay, so that's kind of just something to keep in mind. But stick with the basics until you understand some of the fundamental facts on the Elliott wave. All right, so Annette, you want to look at Amazon? Sure, AMZN. All right, so December for trading Amazon. Okay, so Amazon obviously has come off its bottom, all right, pulled back nicely back here, okay. Had a really big move down though. Let's open up the weekly chart here and take a look and see. All right, so the beautiful thing about this is wave 3. Pretty indistinguishable, I would say. Now, what's interesting is some people would say, well, this is a 3, this is a 4, is this a 5? The answer really is no, because this has the largest owl and it came after the 3. So this has to be 3, right? So that's kind of helpful in that. And this is your, this is your move to the downside, okay? Probably a 4 down here, all right? And then you have your move off again to the upside. That's kind of where we're at now with that. So I would imagine probably Amazon, we're going to see new highs on this. Okay, overall, I think it probably looks pretty good for new highs. And we draw those extensions in, we're kind of looking, let's see, I'd say that's probably it. And then here, so we're probably looking for a target of 190 to 257, I think, on that. Doesn't mean it's going to happen overnight, because don't forget, this is a weekly chart. So it could take a year to get up there, okay? But that's also interesting, because that's very bullish for the overall markets too, okay? And you're seeing this come off the bottom here. Now, in terms of, are we going to get some profit taking before it gets higher? Well, we had a little bit of profit taking here, didn't we? Okay, there's your ABC. So let's see how we're looking here on this for another possible move, and where the short-term situation could land us an end here. So what's interesting here is we're still, looks like we're in 3, no, 3 here, and then 4 here. So this hump here has not exceeded this one here, has it? Okay, and the reason for that is simply because you still have a wave 3 over here. Okay. So that look, so short term, I think you're good to about 154 to 175, and then you're going to have a pullback. But eventually that pullback should resolve itself in more highs. That's kind of the way I'm thinking about it, okay? All right, gold. All right, so gold. All right, we had a couple of little retracement areas and gold hit that. And now we're off to we've been off to the races. So here's our short-term analysis of the pullback, hit that, and here's our short-term target on gold. So gold's still moving up. It's got a green PTF on the 60-minute chart, indicating we still got a little room left to get into that target zone. So I think really short-term, really short-term, that's a 60-minute chart, 190 to 197. And then we should see some type of pullback after that. Long-term, let's open up the long-term chart here. And if we open up this one, this actually was a wave 3 top in 2011, followed by a multi-year correction ending in wave 4 in 2016. And this has been a slow starting, but moving up wave 5. And I'm looking at around 220, maybe to 240 for a top overall on Amazon. All right, but you're gonna have to hold it a while, okay? And you will have to suffer through some profit taking on its way up. So that's kind of what I'm looking at here. So to wrap it up, for December, at least this week, I see more highs until we get to the high on the 60-minute chart on the far left. Then I expect some pullbacks at that particular point that could last for the, probably the beginning part of December, the middle part, and then we'll see what's happening and see if it's how far it pulls back, and see if there is a situation where you could get in for the remainder of the push up. So I think probably December could be a little messy with Amazon, but short term over the next week or two, probably to the upside, okay? So beginning of December, okay. Now, we're probably in a wave 3 inside wave 5, so we'll have some type of pullback and then one more move up, okay? That's kind of what I'm thinking, all right? So that is gold. And then USO here, and Jim, this is for you. is one where hopefully we're finding some type of bottom here, but it's not quite there yet. And the reason I say that is because this is still red. All right, so this has got to either be wrong and change to green, or the market's going to pull back again. All right, so I would not go long if you're not long already. I would not go long here. I would hold off. If you were long, you would have been stopped out already, okay, because you probably would have been under there. So I would wait and let's see if that red PTF on the 60-minute chart goes away, okay? If you're trading that time frame. So on this one here, again, stop here. You could probably put it here, and you should survive a long-term move on USO. So I'm actually thinking USO is going to go higher, okay? Probably, obviously, next year at some point. I never know really the reason why, but it should at some point go higher, okay? All right, so that is that. Let's see, UNG. Okay, Jim Blue for UNG. All right, so UNG, all right, we got stopped out of UNG, which we were long on this, hoping that was a bottom. But so you can't do anything with this, okay, right now. It's too late to go short, and it's too early to go long. You're still coming down. So let's wait for this thing to bottom, all right? And then I think it'll be a good trade. But it's not quite there yet, all right? And then TLT is another one, right? This is the bond fund that we kind of looked at. So we're seeing some improvement here, but here's my problem with this. We've got the red PTF now over here. So any move to the upside long-term has got to be looked at this time as profit taking. And we should actually go back down. So kind of interesting, okay? If this changes, then we'll change. But this is pretty good here. This is basically, showing possibly one more low. So here's an example of we may be getting close to a hook. So the hook would be one more low. The hook would be one more low, okay? And then if you get a bottom and you get that, then jump in, okay, at that point. So I'm keeping an eye on TLT because I do want to get in it, but I'm holding off. And as you can see on this one here, the PTF really saved me here because I didn't go in and then it came back down, okay? So I'm glad I didn't go in it there because a lot of people thought that was a bottom. And this, doesn't look like a bottom right now to me either because of the red PTF on the longer time frame. But that doesn't mean you can't still go up from here as additional people cover their shorts, and some people think this is a bottom and they'll come in. But according to the PTF, it's not a bottom. So that's kind of where we're at there. All right, we got a few minutes left. Anything else? Okay, anything else? Going once, going twice. Silver, let's look up silver. This is another one. It is that, silver broke out of its pennant, okay? Because we had a pennant drawn here, so it broke out. I'm waiting for this. If this turns green, okay, I'm going to seriously consider a buy there, okay? Not yet. I kind of would like it to take out this high too, but we'll certainly see. So we've had the move up. The hook was reached, but this was red. So I'm not going to go long there, but it's also close to going green. So if we see a lot more bullishness come in, it will turn that PTF green. And at that point, it signals a buy, okay? So we'll keep a close eye on the silver. All right, anything else? All right, let's see. Sam says, oh, okay. Sam's asking about Friday's session. Do you mean the stock analysis Friday? Okay. All right, yeah, we have every Friday, we do stock analysis Friday. We look up, we're there for a good hour, sometimes longer. But everybody brings stocks, and we get a good turnout there. And we basically, look at stocks just like we looked at Amazon and all these markets today. And we go over those. So those are really good things to do on Stock Analysis Friday. So I like to really reserve Stock Analysis Friday for the individual symbols. I kind of like to keep this session here more, current in terms of education that you may have signed up for and things like that, okay? So Stock Analysis Friday, great time. You'll walk away with new trades that you weren't even aware of either. So it's almost like a stock picking service, all right? All right, quick look at IWM, and then we'll wrap this up here. All right, so Jim, and again, these are ideal to bring to Stock Analysis Friday. So on IWM here, all right, we're getting some type of possible move. Okay, we had a new bottom put in, okay, here, all right. So now we're getting a move off that bottom. And this hopefully will start to move up from here. I'm gonna wait a little while longer. All right, we've got green and green and green and green there. This pyramid's close to turning here. I'd like to make sure this is a bottom that's in. So we'll see what happens. The ultimate bottom's down here, but I'm talking about this little pullback here. So that's a good sign. So that's probably, again, here's the issue. If you want to go in early, you could do that. Okay, you got green here, you got green, green, nothing red here. The only thing is you've got this pretty strong resistance level right here. All right, so if you get in early and you don't mind maybe waiting a little bit before it pops out, okay, all right, because you got a better price. So you're getting paid for getting in early because you get a better price than waiting for the breakout. So that's a decision you have to make. But your money may be tied up longer before the big move instead of waiting until it breaks the upper resistance level. Okay, so you can play that either way. I'll leave that up to you and what you're comfortable doing. Okay. All right, NKLA. Let's take a look at that one, Alexander, for you. And all right, so not quite ready. Okay, I would not trade this. Still got a red PTF, and we're still kind of skidding along the bottom. So this indeed could be a bottom, no question. Okay, this PTF says it's going to go a little lower than this, but that doesn't mean it's going down to the bottom. I would just wait until you don't have a red PTF any longer on the daily, okay? And then that may be a real good one. So keep an eye on that one. SMCI. Definitely have that one on your watch list, okay? And then this one here will wrap up. This one here looks like, once again, a good buy here based on the daily chart. Our target on this is 405 to 514, all right? You may get a little bit of a pullback here because you've had a nice little run up, but I wouldn't worry about it. Just keep your stop. Do not put your stops on the pyramid on this first leg up, okay? Keep it under here, okay? Keep it right there. That way, any volatility won't stop you out, and you should make it to that target zone. So the short and long-term target zones are really about the same, okay, on this. So that's kind of where I'm thinking we may go. I think, honestly, we're probably going to go higher first and complete 5. And as you can see, we don't have a red PTF yet. So that completion of 5 will cause a little bump in the wave 3. So this is a daily 5 high. Then after that, it will go into a longer term bearish correction with a red owl, and then we'll have a big move up. So this 5 on here and here, I basically transpose this over here so you can see how it relates to that. So I think one more high on SMCI, and then it's going to go into a longer term correction, okay, that type of thing. So I think you're good to hold that, but I think after that you're going to get a fairly good size correction, and then that'll be wave 4 on the weekly chart, okay. All right, great. Well, thank you everybody for attending. Great to have everybody here, okay? And December coming in on Friday, so have a good one. All right, so we'll see you back here next week, and I will put this recording in the YouTube area. And thank you so much for coming. Bye-bye.